Welcome back. Let's talk about Balaji Amines. That stock was down almost 15% at one point in time. Now has recovered from the lows, down about 11%. Post a weak fourth quarter result. And news update on leadership change with regards to 5 independent directors resigning. The outgoing independent director, Mr. Chavli, earlier today clarified that resignation was due to SEBI requirements and no more resignations are expected, and the director exits are not likely to impact business growth. But talking about business itself, we have with us Ram Reddy, the MD of Balaji Amines. Thanks a lot, Mr. Reddy, for joining in. Of course, we understand that the change in independent directors was largely regulatory and that does not impact business. But business itself hasn't been doing too well. I mean, 40% decline in your revenues and EBITDA year on year. Quarter on quarter, there's been a decline as well. Just wanted your thoughts on, are you seeing some sort of improvement in, this fiscal, largely in your pharma and agro business? And the growth in FY24, will it be volume-led, price-led? What are you targeting in terms of margin expansion? Could you give us a sense of business as a whole?
Thank you, Mr. Mangalam. First of all, I would like to clarify you. If you remember in the last 3 quarters, whenever I came on the show, I used to tell you the numbers which you are getting after COVID, last 3-4 quarters were always a bonus. Not for Balaji, it is for entire industry, like all the chemical and pharma AP industry. That was a special period our world pharma AP was doing. If you compare the current numbers pre-COVID, that is 1920, it will be 1 or 2% here and there. One must understand this with all the chemical and API. And as of the numbers, if you say that we have done 2,355 crores on consolidated basis as against 2,322, we have done plus only, not minus. And in spite of there's a degrowth entire world in the pharma API and agro industry. This is a major problem all over the world, not only for the Balaji, it is for the everybody. Yes, you are right. We are seeing there is an improvement in the current quarter onwards, but not again the same way that earlier quarters. Yes, slowly it will take time to improve. We are seeing majority of the pharma, AP and agro industries coming back for the lifting the volumes from their older quantities. And we will see. As far as our business is concerned, yes, we are in the right path, and we are coming up with a butyl amine, as I said earlier, that is 15,000 metric tons, first time in the country, which will be commissioned in the next quarter. That is, second half, you will see the production in the market. This is first time in the country. These products are coming from all the time from the outside country. And apart from this, there's a methylamines. We are coming up with 40,000 tons methylamines plant, which will be commissioned before end of 31st March. Apart from this, we are talking about 3-4 projects which were already lined up. One is the, it's a new, for all of our shareholders and for you also, that is dimethyl ether. This is again first time in the country, which goes majority into the, you can say it is an alternative to the LPG. There's a huge requirement in the country. And we have already started the detailing engineering for this, and we will be starting the civil works in the coming 1 or 2 months, because we already received the environmental clearance for this.
Sure.
And this will also change our numbers. And again, ACN, acetonitrile, as I said earlier, with a new technology that is also coming up after DME. And there's a DMHCL is also in the plan.
Mr. Reddy?
Yes.
Sure. What does all of this mean in terms of volumes, if you can tell us? Because in FY23, the volumes overall were down about 5%. I understand that there were some challenges in the market, but in FY24, what are you guiding for in terms of volumes?
Definitely there will be growth, as I said just now, because
But can you quantify it for us?
Maybe 5 to 7%, minimum 7% there should be growth from the current numbers, because the pharma API is coming back to their normalcy, which was almost 30-40% down in the past 6-7 months.
Right. So you are guiding for 7% volume growth. I just wanted to understand, You said that growth is normalizing post-COVID level excesses. I'm looking at your margins. Pre-COVID, they were 21% in FY19. FY20 was around 19%. Then the COVID excesses came. So the next 2 years, your margin were 29% and 27%. But now, as we speak, going forward...
The numbers with me. 1920, we have done 16.72% of the profit margins over the turnover. And today, this year, we have done 17.69%. So that means there's a 2% growth when you compare to the normal growth. It's not to the bonus. You forget about the bonus.
Yeah, I'm talking about the operational performance here, the EBITDA margins. You, I presume, are talking about the net profit margins. So from an EBITDA margins, go ahead.
EBITDA, we have done 26%. If you talk about the consolidated basis, 26% EBITDA margins, and compare it to the 21% in the 1920.
So which is what I wanted to know. Going forward, is this sustainable or not?
Yeah, see, consolidated, it is definitely 25 to 26% is always sustainable, which I said earlier also.
Okay, 25 to 26% is sustainable. On the debt side, on the leveraging side, what is the debt currently on the books of Balaji Amines, and are you planning to take on any more debt for expansion?
As of now, it's a zero debt. Rather, we are sitting on the cash more than 200 crores. These FDs in the bank, which are earmarked for these coming new expansions. We are going to do 99%. We are going to do all expansions with our internal accruals. Even we are not using the working capital. It's a zero working capital company.
And all the capacity expansion that you spoke about, the butylamine, methylamine and DME plants that will come on stream, how will the utilization ramp up for all these plants, and what will that mean then for your revenues, say FY25, FY26? What should we be looking at?
See, leaving one or two plants with some of the dynamics in the world market, a majority of plants are running more than 70-80%. If you take the methylamines, it's running more than 90%. There's a reason we are planning for the new. On DMF, we require the DMA, that is methylamine. That's the reason we are planning for the new plant. Once we come this new plant in the March 24, definitely we will have the good leverage in the DMF prices also, DMF capacity also, which is not running the full capacity today because it's short of the DMA, and also the price point of view, because if you have the higher capacity, your prices will come down.
So what does that mean in terms of revenues, sir? What will revenues look like once all these plants are functioning fully?
Yeah, I have guided about 25 and about 4,000 crores basing on the last part raw material prices, but the raw material prices have come down and the finished products also have come down because for your information, ammonia is stabilizing to the normal, which was earlier 80-90 rupees, which has come down to somewhere 48 to 50 level today, which is a significant change. And even the methanol and acetic is also coming slowly to the normal position. If these comes down, there may be impact on the revenue.
Oops, okay, I think we snapped that line, but thanks a lot for joining us. Actually, Mr. Reddy, we've managed to get what we had to from the interview, but thanks a lot for joining in. Let's do